In today's video, I am going to be breaking down my picks for the top growth stocks this month of October in 2021. Let's get down and let's check out these amazing stocks. Some of them may actually surprise you. First stock is Tesla. Now, I am a massive bull, as you may know about this stock, and I absolutely love it. It's not just a car company, in my opinion, it's just a company in the future. It's got solar panels, batteries, and everything else. But anyways, volume is absolutely ridiculous, especially when you start considering the price of the stock. 19 million shares getting traded on average every single day at $780 is insane. But when we start really looking at it, its PE ratio is ridiculous. It seems like it's basically an overpriced company. Why is it in the top 10 biggest companies in the United States? Well, we have to look at it as a future business. Because let's face it, Tesla is not a company that you can trade very easily. It can go up and down without really knowing, because there could be bad news that happens in China and then all of a sudden the stock drops $100. So it's a very risky stock if you're looking for trading action. But if you're looking over time, it's had a massive pullback and it's starting to gradually come back into the positive, and it's actually looking very interesting. We have to remember it's not just a car company. It's an artificial intelligence company that sells cars as well as solar panels and the software to be able to run solar panels and the battery packs for the utility companies. So this is actually a very big company going into the future, because there's going to be more and more utilities companies that are being forced to buy essentially environmental stuff, solar panels, wind farms, things like that. And they're going to need the software to be able to run that stuff and have batteries, because obviously there's no solar and no wind 24/7. So because of that, they are pretty well set up for this big environmental push from governments around the world. So we've seen their stock. It looks like it was trading sideways for years, but in reality, that was actually still massive growth during that time. But it's just because recently there's been stupid growth. And from there, they did have a pullback. They also did very slightly have a double bottom almost. And from there, they are actually trading pretty well within a range, which is actually very surprising to me. It's getting near the top of that range. However, very recently also, that the MACD just went positive as well, and it's actually at the lower end of that measurement too, which means that it's got some room to grow. The two reasons why I am personally looking at this stock this month. That is the first reason right there. This is the second reason, the MACD. We've also seen very strong revenue growth over the past couple of years, last year being the first positive earnings year. They've also had 3 out of the past 4 quarters being very strong when it comes to earnings. And they just recently had a story come out that they've been doing very good with their factory in China when it comes to deliveries. So that's kind of promising in my eyes. Next is NVDA. NVDA is a very interesting company. It does have a very small dividend, but that's not the main reason why we are looking at this stock right now. Its PE ratio is kind of on the high end when you look at other chip manufacturers, but remember, there is a massive chip shortage in the world, and guess what? NVIDIA is a massive portion when it comes to AI technology, Bitcoin mining, or just crypto mining in general, but also NVIDIA is massive when it comes to AI type vehicles, AI self-driving vehicles. Many of these manufacturers are starting to, at least I'm reading stories about, contacting NVIDIA about basically using their very smart chips. So that to me is telling me that this chip shortage may be short for companies like Tesla, who don't go through bigger companies like NVIDIA in most cases, but for other auto manufacturers, NVIDIA is going to be absolutely killing it. During this time, they've had a very good run. They've had a slight pullback from their high, which means to me that it could be a good time to at least start getting into it. They've had 4 pretty good years. Obviously 2020 being a bit difficult, but 2021 being a killer year. They've had 4 great beats quarter after quarter after quarter, so that's fantastic too. They do tend to raise their dividend, but remember, this is not a massive dividend company. You're not buying it for the dividend, you're buying it for the growth. Going over to Canada and Shopify, we have to remember that there's going to be a lot of new businesses popping up now because the governments around the world, especially being Canada, is really looking at trying to promote new business because a lot of businesses have gone under, and because of that, Shopify is set up to be able to help businesses with their e-commerce and their websites. That's what Shopify essentially does, and because of that, they are set up really well for the future. A lot of businesses that were not on the internet before had to go to Shopify and get their businesses running online during the pandemic. It was a real big push to get everyone online. And the conspiracy theorists might have a point. Who knows? But either way, Shopify looks very interesting. There is no dividend, really, at all, like zero. There is a pretty good strong volume considering that it's a $1,700 stock. This was that big push that we've seen when it came to the pandemic, and we're seeing these double bottoms multiple times, which is actually quite interesting. It's really started to settle down recently, so it's still interesting to me because every time it comes back down, it's still hitting a new higher low, which to me shows that there's still huge growth potentially to come. It's had a very good quarter recently and an absolute ridiculous 2020. And TD Bank, and there's one good reason for TD Bank. Now you're probably saying, well, how is TD Bank a growth stock? Well, it's because their PE ratio. Their PE ratio is below 10. Whenever the PE ratio of a Canadian Big Six bank is below 10, there's usually within a month or two of it getting below 10, there's usually a pretty strong push to the positive to get it out of the 10 because many bigger investors or even many investors in general, when they see a Big Six bank that's below 10, that's not having any financial issues, they tend to start saying, wow, that's a heck of a deal. And I can almost guarantee there's going to be probably a good 5% push to the positive this month, or at least next month, one of the two. But either way, it's looking very, very positive. It also does pay a dividend as well, and its ex-dividend date is October 7th, which means that there could be some nice drips coming in October as well. We've seen this big, massive push. Of course, this was the recovery push. After that point, there was this push, which essentially people were starting to figure out, wow, the banks can make money in a recession these days because they're charging monthly fees on pretty much everything, and they're now a monthly subscription style business. Now, it also, something else that I really want to point out is that it also did recently hit a double bottom, and because of that, I personally feel that there could be a little bit of a push to the upside coming soon. And of course, when that correlates with a low PE ratio, that's very positive. Also, we are seeing when we get down to the bottom where the MACD is these the two MACD lines are starting to converge near the end here. We could be looking at maybe a week or two out until they cross, and whenever that blue line crosses over, I'm colorblind, green or yellow or whatever color line that is, there's going to be a push to the upside as well. We do see very strong dividend growth, and we don't see it recently, mainly because they haven't been allowed to raise dividends, but that will change most likely next year. And I've regurgitated this a million times, but they've had 4 good quarters, and of course revenue is strong, earnings is strong considering that they had a higher revenue number than they did the previous year with lesser revenue. So overall, that's just absolutely fantastic. So that's my picks for the top growth companies, in my opinion, this month. Of course, always do your own research. Never trust a random person on the internet. And I'll see you guys again next time.